This video is for helping you complete Part A of the home ownership project. By now, you have either been assigned a partner or you have been allowed to choose a partner by your teacher. You and your partner should work on each aspect of this project together. On the first page of this file, you will notice that you're filling out certain information. Before you begin filling out any information, it's important for you to remember that this project must be completed as an Excel spreadsheet, not as a Google sheet in your Google Drive or in an Excel app. It can be completed in the actual Excel licensed program if you're running a laptop or a MacBook or a desktop Windows-based PC. But on a Chromebook, you will be required to upload this to Office 365 so that you can use it in the Excel environment. Otherwise, some of the formulas that are pre-existing in the template may not work correctly. So once you've done that and you have opened up the project in Excel, whichever way you do open up in Excel, you want to fill out the first page. You and your partner will need to decide who is the borrower and who is the co-borrower. And based on either the annual salary that has been assigned to you or based on the annual salary that you two have decided upon, that's what you're going to be filling out here. Your down payment amount may have also been assigned to you by your teacher. So you would want to use that amount if that is the case. Otherwise, you and your partner will need to come up with a down payment amount. Then we'd like you to spend some time on Zillow.com, and that's an easy website to get to. Just Zillow.com. And you're going to be finding a house that is within a certain mileage. I believe it's 45 miles of Fredericksburg. So we don't want a house in California. We don't want a house in West Virginia necessarily or North Carolina. We want a house that's somewhat central to our area. Now down here in the yellow box, you're going to see some directions on what I'm just explaining to you. These due dates, unfortunately, are not correct, so I'll need to edit those. Our due dates are November 17th and December 4th. The point values, however, are correct. Moving on, go to the second page. The majority of the second page is formula-based, and it's going to be working already behind the scenes with very little information from you needed to be actually put into it. The gross monthly income, that will come from the original sheet. The yellow area is where you will need to enter all the expenses that you may have. You'll want to come up with an appropriate car loan. If you have a credit card balance, what is the minimum you are paying on that every month? If you are paying child support, if you have student loans from college, and any other expenses. Those will go in here. You will need to enter yellow areas in this entire project. And then the rest of this is going to calculate. Now, down here at the bottom, you see there's another yellow area. You can either enter a 15 or a 30-year term for your mortgage. And the 15-year terms are obviously going to be a shorter amount of time. They will increase your mortgage amount because you're paying it off in a shorter amount of time, but you will save a lot of money in interest. So that is the benefit and the disadvantage of a shorter term. What will happen here is once you've entered in everything, you will receive information here that says your loan has been approved or your loan has been denied. You have to pick a less expensive home. If you are denied, you will not be permitted to go to Part B in the project. You will need to go back to Zillow and find a house that's not as expensive, or maybe choose a 30-year term instead. You are permitted to choose a 30-year term, but we would like you to investigate whether or not it is possible to get by with a 15-year term, because it is fiscally responsible. Then you'll go to the third page and you will see that there are rates here based on the type and term of loan. So it says here, to determine your bank financing, enter in the amount of down payment you will make on your house. That was already done on the introduction sheet. So that will automatically carry over. These are green highlighted, so you will not have to adjust them. It says if you cannot meet the down payment requirement, you will need to select a loan option that allows you to put down less money with a higher interest rate. Most mortgages will end up being 30-year terms. And if PMI is needed on your sheet, that is what we call private mortgage insurance. And that is for borrowers who have a very high, maybe a credit risk, or for borrowers that are not putting down enough money via their down payment. So a lot of mortgage companies will charge private mortgage insurance until you pay off enough of your mortgage, until your loan to value ratio drops below 80%. And in real life, this is actually something that the lenders do not keep track of for you. It's your responsibility to kind of track that and watch out for that, and then contact your bank and say, hey, I've hit the 80% threshold. It's time to remove that extra fee for the private mortgage insurance. We don't want to pay that anymore. Unfortunately, some lenders require it, so it just depends on who you borrow money from. So that's 1, 2, 3. On the fourth sheet, you're going to see your loan amortization schedule. So if you have a 30-year loan, you're going to see twice as many payments and twice as many rows as you would a 15-year loan. And here you'll be able to actually tweak things over in these fields. You'll be able to put in additional payments. Let's say you wanted to make an additional payment. That will come up in the second part of the project, potentially. And even now, you will need to do that in the first part of the project when we get to the fifth page. But you'll see a lot of information down here. Here's a version that is filled out, so I can give you an idea for what that's going to look like. And what the loan amortization schedule does for you is it gives you every single payment. So payment number 1, my beginning balance, how much my mortgage payment is, if I'm paying extra to pay down my mortgage balance. Here's that total payment again, which is the scheduled payment plus the extra. And this is how much is being paid from this to the principal, and how much of this is being paid toward the interest. And then they take your beginning balance and reduce it by how much you have paid toward your principal. So you have your beginning balance minus your principal equals your ending balance. And then that ending balance becomes the beginning balance for your second payment, and so forth and so on. And you can see here that I have a 15-year loan, so I should only be going out 180 payments, which is 15 times 12. Actually, I'm going out less than 180 because I'm paying an extra $100. If I took out that amount and only paid my mortgage payment, I would go out a little bit further. And I'm going way out. Let me double check my math on that one. Yeah, I have a lot more payments than it appears that I'm supposed to have here. I think it's because I don't have anything filled out in the other boxes. So Yeah, I've got some mistakes in here, so please don't follow that. If I made this a 30-year loan, that would change this number of payments. Then when we go over here to the last sheet, let me come to the blank one. You're going to be filling in some information in the yellow highlighted area. The yellow, this is your mortgage payment. They will bring over your total mortgage payment, including private mortgage insurance. They will fill in your property taxes. They will fill in your monthly expenditure in home insurance, and they will fill in your total outlay per month. So, what you think is your mortgage payment is not exactly what you're paying out every month or writing a check for or transferring over to your mortgage company, because there is private mortgage insurance, property taxes, and home insurance that get spread out over the course of a year, and they're added to your mortgage payments. So these things get held in what we call an escrow account. And an escrow account is basically they take the money that you pay every month and put that into a holding account. And at the end of the cycle, the year cycle, they pay your property taxes to your insurance company, and they pay, or to your local government, and they pay your home insurance to your insurance company. So these are things that you are required to pay when you pay your mortgage payment every month. So what looks like $1,000 mortgage payment can often bump up a few $100s every month just to take into account property taxes and home insurance. So that's an important thing to understand. Now, when you get to the end of these first 5 pages, you can see here that there's a 10, that's 10 points, a 7, that's 7 points, and a 3, that's 3 points. Those add up to 20. So those 20 points are what we were going to be grading you on. If in this area we see that your loan was denied, we will turn this back to you and give you a temporary 0 until you can edit everything and get it turned in satisfactorily. We will not allow projects to go on until you get this part straightened out. So if you see here, this is what it should look like. Let's see if mine's correct. Hang on just one sec. The congratulations method, and it's going to ask you to try a 30-year loan. You may qualify. If you don't, you can try a 30-year loan and qualify. And if you still don't qualify, then you have to find another house that's more reasonably priced. If you do not see this congratulations message, then you need to change something before you turn in part A of your project. Okay, I hope that helps. We'll be making a separate video simply for the part B part, so that you can see what that looks like and let you go ahead and get started on that. Thank you.